Aloha, everyone. Joshua Hayes at BigWaveTrading.com. I hope you all survived the week and kept your wits about you. One nice thing about being as old as I am, nearing my 50s, 46, I do believe, is that now I've had well over 20, not well over, but I've had over 20 years of market experience, lived through the 2000, 2002 bear market, 2008 financial crisis, the flash crash of 2011, the 2015 market pullback, the trade war, and interest rate poor decision by the Fed in 2018, COVID of 2020, and the 2022 pullback. That nothing really affects or shocks me. I don't fight the tape. I don't fight the market. That's why following this day in the swing position account where I have the most capital, we went from 200% long, and after this date, went sub 100% long. We were 200% long much earlier. Don't think that we just went 200% long here. When we were starting to break out here, and as we kept up higher, I was all in, fully margined any day I could on any signal. But after that crack, it dipped immediately from 200 to sub 100 and never ever got back over 100% long in those swing position accounts the entire time when we made new highs. Before we even made new highs, I made mention in my chat room. The post is time stamped. Everybody can go back and see it. I made it very clear. Something is weird about this rally. I don't know what it is. Probably go much higher. Did not have the tariff situation in the bingo card. I knew the tariffs were going to be happening. Never, ever, ever saw it escalating to what it is now. So I want to make that very clear. Had absolutely, that's my black swan event. Did not see this coming at all to the degree that it's coming. But whenever we hit new highs here, right around early February, I made mention everybody I talk to is bullish. Everybody says that they're long stocks. So I made mention if everybody's long, if everybody's bullish, what capital is out there to make the market go higher? Then we rolled over, and by about here, the swing and position accounts were already 100% cash. Now, the long term portfolio, I took my first nibble, then I took a bigger nibble, then even a bigger nibble, and in the long term account, the main one, all in. Now, if we roll over and go lower, I have capital in other bank accounts that will come into the long term accounts. And the next time there's panic and fear in the market, I'll do the same thing. Just like I did in the morning of August, was it 25th? 5th, August 5th, right here. Time stamped once again. Told everybody, buying the panic this day. We rallied. Well, I bought panic this time. Are we going to rally like we did last time? I'm not so sure anymore, guys. Now, it's above my pay grade. It's above what I'm not an analyst. I trade for a living. But what I'm seeing in the Forex and credit markets are now starting to concern me. If that tariff situation doesn't de escalate, if we have some sort of inflation tick up, which we didn't see in the most recent inflation reports, I could see this being a 1970 style market. Everybody always talks about the V ramp to new highs, or I can see us going lower. Well, what if we barely ramp to new highs and or barely ramp to new lows and just chop around and are volatile for the next 4 years? Are you ready for that? I am, because if that's the case, the main focus with the most capital in play, if you know what you're doing, will be in the day trade side, the short term side, the intraday volatility with the elevated VIX. Less capital on the swing position side, obviously. Quarterly portfolios are going to have to be reduced significantly. All in once again in Q4, no matter what the market environment is. I'll always be aggressive there. And long term portfolio, we'll just keep up on picking up the pieces as we sell off. But just to let you know, it's a crazy, weird market. Now, on the swing side, while I don't have any new long signals this weekend, I'm still always looking for new long signals. Now, recently, following this day here, NUTX blew out the estimates on the top and bottom line and had huge earnings and sales growth in the most recent quarter, over 200% for both. Plus, I think that they beat sales estimates by 200%. So it's a massive combo. So I'm now watching this one. And by the way, It was on my radar following this day. Highest volume ever with Max Green Bot rallied. Now here's the problem. I never ever during this uptrend got an entry signal. You notice the little blue spike lines? I need that and or for it to show up in some kind of squeeze scan to get long. When we get this spike right here with the pocket pivot point signal, we're extended from the 50 SMA below average volume. Never even saw that pocket pivot point signal. Now, this is before the blowout earnings. So right now, it's just a trade idea. It's just in my scans. It's in my perfect speculator scan. I'm seeing it every day. Pocket pivot point signal right off the 50. That's actionable. But tell me, why would you pick this on this day with that below average volume? And then the very next day, back-to-back pocket pivot point signals, nice move off the 50, but why with that below average volume? So I never even traded this one. Now, once they blew out earnings and sales in the most recent reported quarter, I'm now interested, looking for a pullback buy to the 50 SMA 21 EMA and or pocket pivot point signal, and it's gone. Never got it. So despite the weakness in this market, there's still stocks with amazing earnings and sales growth that are doing that. One stock that's doing very well, but the mere fact that there's even one gives me a glimmer of hope that when all of this goes away, we'll be right back to normal. Now, one of my favorite stocks in the stock market is Palantir. You can look at where Palantir is relative to its 200 SMA and 500 EMA and compare that to where the SPY is right now, and you can see what I'm talking about with the relative strength. So I'm still hopeful that all this can resolve, but if it doesn't, we could chop around. And some indications that it might not resolve is that what's leading? Look at the gold miners just this week. Look at gold this week. Extreme moves. AEM, you'll notice there's still a white triangle there because it's still on an end-of-day basis, has not triggered a full sell signal. I no longer have a position, but look at the gain, 68%. But AEM, look at that move. Our gold, look at this move. AU, GFI, I mean, here's your leaders. Gold, AGI, PAAS. It's a silver stock, and usually silver's lagging, so I don't like it nearly as much. But I just wanted to show you that gold stocks look good. There's other stocks out there that are going to try to form a base, maybe, but I don't know if I love these stocks yet. Got to look into the fundamentals more. Pay, Musa, which is an oil stock, XPEV, Chinese EV, looks pretty good, holding up very well. And then there was an IPO, KMTS looks okay, and then Groupon. But this doesn't scream risk on looking at those. And then getting back to the end of day stocks, I'm still tracking 19 stocks on an end of day basis that I got a long signal on that have not triggered a 100% full sell signal. Now, I'm no longer long any of these because once I have gains, my stops get pretty tight, which is not really the best thing to do in this market, but it's worked out. It's paid the bills. That's all I can ask for. But you'll notice where the white triangle is and where the stock is, and you can see that in all of these stocks, there's 19 stocks since that initial long signal on the swing side. And spot, here's another leader. I still don't have a 100% end of day sell signal, which would be a close below the 200, 500 EMA, or even like there's going to be a speculative name that comes up here, MASS. You can see where its entry is, and it needs to fail the 50 before it triggers a full sell signal. There's Bow. Here's another speculative name. It still hasn't triggered a full sell signal. It's come close twice, still hasn't done it. And now I think we're back to the beginning, MRCY. So all of these still look good. In my opinion, if the market was truly about to become a negative 50% kind of market, at this point in the decline, after the market looks like this and we get below the 500 EMA on the SPY and QQQ, I wouldn't be tracking any names on an end-of-day basis. But I'm still technically members, if they're trading on an end-of-day basis, could still be long up to 19 different names. So how bad is it? Not terrible yet, pretty bad. But overall, I'm thinking that we're probably entering a period of chop more than a V ramp or a move to new highs or a move to new lows. The recent range where previous support will now act as resistance in these lows. I expect a lot of backing and filling. But, gold looks good, and I got to admit, I'm Bitcoin hodl. I believe on holding, as long as it's a deflationary asset and there's a limited amount of Bitcoin out there and it's not going anywhere, um, as long as it's a deflationary asset and no new Bitcoins are coming online and there's a finite amount of Bitcoin out there, I'm bullish on it. And as you can see, it's still very strong, holding above its 200 SMA, just like PLTR, while the market completely falls apart. So while there's nothing that I'm looking at on the new long side, while it screams a risk-off environment, expecting more chop, there's some signs out there. I've given you a few stocks to look at. I wish that NUTX would set up, because what I am doing now is any new long signal I get, I'm going quite large in, and I'm going to go ahead and disclose a speculative long signal that I still have on the books. So after this day, VSTE off the 52-week lows printed a pocket pivot point signal on heavier volume. And while BOP is going the wrong way, there's a lot of green BOP in this chart. And more importantly, there's no red balance of power, BOP balance of power in this chart. So what I did after this day, I set a buy stop limit order above the high of the day. The next day, consolidation. The next day, consolidation. To the next, actually 4 days, consolidation. So there, it hasn't triggered yet. BOP is working its way back up higher. But how would I trade this if it does fill? Well, if it trades up and through the buy stop, I'm hoping, not expecting for another 500% move in a few days. That's what I'm personally looking for. However, if it gaps above, the trade will be canceled. Why? This stock gapped above, immediate failure. Gap above on big volume, especially if there's a news catalyst, failure. So it needs to trade up and through it to get long. If it gaps up, we'll just be canceling it. And let's say that this session was this session and it triggered and filled long. Well, I'm taking some profits after this day. I'm probably selling 20% at the market after this day or before the close. Inside day, hammer candle breakout with this day right here, I'm probably selling another 20 to 33%, if not 50% in this tape now. With this tape, it'd be more aggressive to sells. You get the gap up, you get a free gift. Now at this point, no matter what, this is the final stop. So I start just trailing it with stops all the way down. Final profit stop gets hit here. So that's how I'm going to trade VSTE if it triggers. Now, oh, sorry, little hiccup there. The one last thing I want to look at is this squeeze scans. This is my daily squeeze scan with super tight requirements. This is my weekly squeeze scan with super tight requirements. What's funny about this is that GEO is in the weekly squeeze scan, and back here it was in the daily one, which looks for this medium and tight squeeze. And then on a weekly time frame, while that's happening, I need triple green with these indicators. I could care less about any and all indicators in the market. Price is all that pays. All I'm looking for is just confirmation. And basically, it allows the more indicators that are lined up whenever. So if this flat base was happening without everything lined up, maybe I only put 20% of my account capital in it. When all these are lined up, now maybe I'm putting in 35% of my account capital. So, and that goes back to VSTE. VSTE is actually a little bit larger of a position on the books that I normally would not take. But after a 20% market decline, I'm willing to go big in speculative names. So that's why VSTE right now, members know it's on the books and members know it's a bigger than normal position. We'll see if it works. But when GEO breaks out, or if you want to buy it when it's in that weekly squeeze off the 21 EMA, GEO made a 30% move. Now, GEO's in the weekly squeeze scan. CXW's in the weekly scan. So is APEI. But just based on the way API trades, this stock could not even be considered. Shouldn't even be in the scan if I put volume requirements. But I loosened it up for this bear market, so it's in there. But CXW and GEO are in there. What is CXW? What is GEO? Private prisons. So that's your market right now. Gold, private prisons. Does that sound like a risk on environment to you guys? So I'm going to look at this weekly chart and then show you what I'm looking for to make it actionable. So this is GEO on the weekly chart. This is CXW on the weekly chart. Now, the best setups are in stocks with huge earnings and sales growth. They make this scan. APP, I'm just going to do the ones last year. APP made this scan last year, right here. Notice how it's holding the 21 EMA on the weekly. Flat base, breaks out, huge run. SMCI, flat base, breaks out, huge run. Notice the long squeeze in here. Also holding the 21 EMA. Remember about these two. Well, App didn't have it until after it broke out. So App was already a top stock, but that huge earnings and sales growth really started after the breakout, after the move started. SMCI already had it in its base, and NVIDIA had it as it was in this consolidation, holding the 21 EMA. Squeeze, lots of red dots, fires long. So is CXW in that position? Well, traded below the 21 EMA. It's already different. Not quite there. Does it look as tight as the other three that I just showed you? No. GEO, a little bit better, but still got below the 21 EMA. So now we have to become more symmetrical. Those dots above, they need to flip to the downside, and or we need a longer base. So it's not there yet. But does GEO and CXW have the kind of earnings and sales growth that SMCI, App, and NVIDIA had? Absolutely not. So we're in that kind of market, guys. I believe it's a risk-off market. I'm always looking for new plays. If I didn't live on Maui, and remember, I'm not going to live here forever. When I get back to the mainland, I'm going back to day trading. I'll be around all day long day trading. But right now, it's all about the intraday. But even then, today, these were the only 4 stocks of interest for me intraday. RXRX barely moved higher. Bond failed after the open. CDT failed after the open. MSPR basically failed at the open. So it's still very, very thin, even on this side. And that's all right. If you preserve your capital and save your capital in this market, you'll have more of it to work when things turn around. And guess who's going to be there on that day when things turn around? I am, just like I've been the past 20 plus years, just like I will be the next 20 years.